Let's now get into ETFs, and with NVIDIA's recent outperformance, what's the broader value proposition of investing in FANG thematic funds? Billy Long joins us from Global X ETFs. Billy, good to see you.
Hi, thanks.
Of course, we've been talking about that narrow leadership we've seen in US stocks led by those FANG stocks, or the Magnificent Seven, if you like, but obviously with NVIDIA being the clear leader there. So, does that thematic remain, do you think, given those valuations?
Yeah, you're right. I think NVIDIA has outperformed the broader market and also its FANG counterparts as well. But I think the key thing to note in terms of investing in a FANG thematic or a Magnificent Seven thematic is that it's about diversification and looking out for the key winners in an innovation phase. And I think this is really important, especially during a disruptive change. So if you look at back in the 1970s and 1980s, during the PC era, the clear winners at that time were actually Hewlett-Packard and IBM. But if you focused on those two names, you would have missed out on Intel and subsequently other names as well. If you look at the internet era, the clear winners at that time was going to be Oracle and Cisco. But obviously, if you focus on these two names, you would have missed out on Google and also Amazon at a later stage. So I'm not saying this is a zero-sum game, but I think the key is that during any innovative change, there's always going to be key leaders at one time. But then there's going to be guys that's going to benefit from the development of the ecosystem.
Well, you talk of innovative change, and of course now it's all about AI. So it's a question of how you actually play that.
Sure, yeah. So there's a few things in AI that's coming in. I think one of the three areas which I'm more excited is generative AI, which is being led by Google and Meta. They're using it to improve their ad performances, such as Apple's Gemini AI and also Meta's Advantage Plus. All are using it to improve their revenue. If you look at robotics as well, that's quite an interesting phase as well. Robotics and AI, we're seeing Tesla using it. So Tesla's going to introduce their Optimus robot by the end of this year and introduce it to factories. And it's going to cost less than $20,000 per machinery. And that's a pretty viable option to improve operation efficiency. And I think we've always talked about cloud computing, where Amazon and Microsoft has created this platform for AI training, AI inference, and it's lowered the barriers of entry for machine learning.
Yeah, it's all about human obsolescence, really, isn't it, Billy? Let's then take a look at what are the potential risks you see then at the moment?
So I think a lot of investors, a lot of clients always talk to me and go, hey, Billy, what about the valuation, right? And they're right, it's a valid point. You look at Microsoft, all these players are trading at 20 to 30 times, much more expensive than the S&P from that sort of point. But I think the key to note is that the PE ratio needs context. You always need to compare PE and the growth, which is why we look at the PEG ratio, which is the PE compared to EPS growth. And if you look at that, Microsoft and Meta, all these names are trading about 1 times PEG compared to S&P, which is trading at 1.7 times PEG. And if you look at NVIDIA, it's actually trading at 0.3 times PEG because you're paying 35 times for about 100% growth in the next few years annually. So in that way, valuation is important, but look at it from a context.
All right, so how do you play then? How can you get a slice of this for an ETF?
Yeah, so Global X FANG Plus ETF tracks the NYSE FANG Plus Index, and that comprises of the 6 FANG names plus 4 of the highest growth innovative stocks as well. So currently, the constituents are the Mag 7 plus Broadcom, Netflix, and Snowflake. So we're also introducing a hedge fund version, which is going to be launching in Friday under the ticker FHNG. And the key is that with the hedge fund, you still get exposure to these key innovative and high growth stocks, but it also gives a tactical overlay if the investors have a view on currency movements. So for example, if an investor is bullish on the AUD, which is valid considering the recent hawkishness of the RBA, they will look at the hedge fund, which gives them that tactical overlay. If they don't have a strong view, they could still look at the unhedged fund. Either way, they have exposure to one of the highest growth, most solid companies globally.